Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by FinLearn Academy. So this is the week's end, quarter and month as well. So on a week on week basis, market has ended on a very flattish note, minus 0.2 percentage around. But on the week on a month and on the quarterly basis, Nifty has gained a 2 percentage. The start of week was on the very flattish note. The first two trading sessions were quite flat, but we have seen a very good amount of the momentum into the latter three trading sessions. So let's dip in how the Nifty looks like now and what are the key potential levels for the coming time. So on a weekly basis, Nifty has formed the doji candle after a very strong bear candle previous week. And in this particular week, if we see the day wise, so market was not able to move above the 19,800 level, whereas the Nifty has taken a support at a 19,500 level. This 19,500 level support is a previous horizontal support line where multiple turning points that we are able to see around these particular points. And secondly, the purple color moving average, which is a 54 period moving average. So one time, two time, and this is what the third time the prices are taking a support. But supports strength will get confirmed once prices are able to breach the resistance thereon. So at this particular point, the view is a positive because 19,500 is a support level with an horizontal and moving average line. But we will get a little bit more validation once the market starts to move above the 19,800 level. Moving below the 19,500 level will be a kind of the short-term damaging factor than the further declining momentum that we can expect, but that is only below. We can look forward negativity only below the 19,500 level, and on the lower side 90,300 to 90,200 level can be the potential. So this is something from the sector side, Nifty side. Now looking at in a sector perspective, in where the market has ended on the very flattish note, which sector has performed well? So this is the Nifty healthcare sector has performed well. So here we can see that prices were under the consolidation patch for the longer time and from the lower band, and again the 50 period moving average they have started to pick up its momentum. So kind of the positive development here we are seeing. Nifty reality in a previous in this particular month, it has formed the all-time high level after the very huge amount of the consolidation patch retest and then breakout. So that is also a kind of a very positive sign in this. So these are the sector under the limelight. For healthcare and pharma gets overlap to the great action, but if we look at pharma sectors as well, on the monthly chart, it is again it has already given the breakout, and coming to the daily chart, it is also in a lower band and started to pick up its momentum. So here the index has ran up very well. Then there is a kind of consolidation patch happen. So it is like that, whatever the upside momentum has happened, it has consolidated, digested the upside momentum. It is at a lower band of consolidation patch, and now it is finding the traction on the higher side. So this is the sector under my radar where I find that risk reward ratio is quite proper one. Now, looking at a sector specific, when we are talking about the pharma sector, I take the one of the leading stock from the pharma sectors, that is a Sun Pharma. So in the Sun Pharma, we are seeing prices has given the very decent breakout. First of all, on the monthly chart, this is what the 100 months consolidation patch breakout that we have seen earlier. So that is a very bullish development that we can see. After the bullish development, it is not so that your price will move in a one direction. There will be some sort of pause or some sort of zigzag momentum, but on a higher time frame, it has formed a very good structure. When I know low down the time frames like a weekly chart, so here also the previously we have seen the breakout, then again we have seen the breakout of a tiny trend line. On the daily chart, prices has broken the whatever the previous highs that were there. So it is creating some sorts of positive momentum in the pharma sector. So this is the one of the stock that I can see. We have talked about the realty as well. So realty, I take the DLF. So in the DLF again, I like those setups where the prices has consolidated for a good time. They have given the breakout, they have come down, and this is what the internal support they have taken, the moving average support that they have taken. Now tiny trend line has broken out, so it is giving me a kind of confirmation. This is a sign of the bullish reversal is the one that we are looking in. So these are the two stocks on the positive side. But let's say if there is some sort of pressure in the market and some of the weakness we are seeing in the market, then for that particular purpose, I am looking at SBI cards. So this is a SBI card chart. If I look at the weekly chart of it, so here I am finding that the prices has been into the symmetric triangle for more than 100 weeks. it is reacting from the upper band of consolidation patch. Whatever the immediate support levels were there, so it has got breached on the lower side. So this is what a technical negative development or bearish continuation sign that we are seeing on the daily chart. This is how the structure is that. So any bounce happens, so around 805 to 815 in between. So that is what an again the resistance level which can act as a very powerful zone. Or if price continue to come down and move below this particular level, the 780 which is acting as a support level for past couple of days, once it is moving below this level, then there can be a short term declining momentum up to the 764 that we can see, and then followed by 740 level around. So SBI card is the one stock within a conditional approach that we need to look at, and the second one is a Jubilant Pharma, Jubilant Food. So in the Jubilant Food, as of now, the QSR companies has did quite well. But if I'm looking at this particular stock structure, so whatever the declining decent rise happened, but this decent rise, if I'm measuring through the Fibonacci retracement level, so that is what my top and this is what my bottom. So prices has almost come to my 61.8 retracement level. So that is technically one of the resistance point I can say. Now this 61.8 retracement level coincides with my previous turning point as well. So this is the same supply zones in the past that I am able to see. Historically, many of the times study point happened. This is the rising channel. It is at an upper band of the rising channel. From the upper band of the rising channel, stock has formed the bearish reversal candles like a bearish engulfing pattern. Prices has broken this particular rising trend line as well. So I sense that there is some sorts of a selling pressure is that. So 556 can be the immediate resistance point for it, and once price starts to continue to come down, so the next best support level that we can see is around the 504 level. So these are the two positive side and two some sort of bearish development that the things has been discussed. So whatever the discussion that we did, that is for the educational purpose only. Thank you so much and stay tuned.